Hope is a virtue, we're told, but in the unforgiving world of financial markets, it can be a curse. It's an admission our trading discipline is starting to slip. Hope, mope, and dope. Gerald Ashley explains.
Hope, mope and dope, another great old adage, you live in hope and a market position, then you start moping when it goes wrong. Bear in mind, you haven't taken any action here, you've been hoping and moping. When of course the inevitable happens and you have to take your loss, you feel a real dope, and you may well say to yourself, well, I won't let that happen again. Well, it's a well-worn path and sort of tendency for people to go around that loop.
Hope is a key emotion in trading, of course. It's what underpins falling markets.
People who are long in a falling market just keep hoping that it will get better. What they fail to do is to take action and to actually cut their position. One might even say they're almost religious traders, in that they're praying all the time rather than taking action.
And perhaps you think hope is the dominant emotion in rising markets. Think again.
And maybe slightly bizarrely to some viewers, I believe bull markets are driven by fear. And I'll tell you why that is. It's fear of missing out. When a market starts from a bottom and starts climbing up, more and more people join in. There's a sort of body of excitement that starts to build. Then people get a little bit fearful, thinking, well, my friend or my neighbour or my relative is making money in this market. Why am I not doing so? I must overcome my fear and jump in. And I think you'll find on many occasions when markets are priced for perfection, you find there's no fear left and we're at the top.
And here's an interesting thing. We feel the pain of losses at twice the rate we feel satisfaction of any gain. In fact, the psychologist Daniel Kahneman won a Nobel Prize for his work here.
What he found was that in times of when things are going well, we feel quite nice about it, but we really feel tremendous grief and pain when we're making a loss. And we will do much more to try and get that loss back than when we're in a situation of profits. So to put that in market terms, it means we often cut our profits too soon and we run our losses too long. Not only do we sometimes run our losses, we start taking some pretty bizarre and irrational decisions, like maybe increasing the deal size, the position size, hoping that, that word again, hope, that by averaging our price down, we're going to make things better. But we're really in headless chicken territory, I think, then. And there is something about, I might use the term, get out of jail. If you've been underwater in a position and you get back to a flat position in terms of your profits, you actually feel a form of relief. Anything to avoid that pain.